thanks so much for coming, and I'm excited to be here with a mentor and a friend. I think when you look back on Don Garber, no problem. I think when you look back
if
on
you have a gold medal, you can do what you want.
You can do what you want.
Or two, or three, or four.
I think when you look back on Don Garber, you're going to think about guys like Pete Rozelle or Lamar Hunt or somebody that was a founder, creator, something that took something and made it really special. And on top of it, along the way, was a really good guy who never really changed. And so it's my pleasure here to be sitting on stage with a mentor and a friend. So I guess we'll get right into it, Don. You know, the big news, the cutting-edge deal with Apple. Strategically, why'd you do it, and what does it mean to the MLS?
Well, let me just say it's great to be here in front of everybody, and my feelings about you, George, are in the same vein. You know, one of the great leaders of our industry, and has had such an accomplished career, and everything you're doing now with Bruin, which we're going to talk about, I think is so relevant to folks here who are both investors or potential investors and people who care a lot about our industry. The uniqueness about with Major League Soccer is it's a partnership of owners. And that single entity structure, which was created many, many years ago, was about the idea that you would get a bunch of investors together who believed in a long-term investment opportunity in sports, in this case, men's soccer, and work together to create all of the systems and governance and decision-making so that you could capture trends and opportunity. And we've done that in so many different areas, from building stadiums to how we go about signing players, et cetera, et cetera. But as it relates to media, we saw 5 years ago the trends that were going on with our fan base, which is the youngest in pro sports. 80+% of them were streaming soccer via a wide variety of services. And as we continue to engage with our fans, we knew our agreements with ABC, ESPN, Fox, and Univision, and our global agreements were coming to an end. We have 28 local agreements in every one of our markets. And we took a step back and said, how do we go to our owners and create a new model that would be difficult for another league to replicate? We basically had them vote, after seeing a plan, to take all the local rights back from the clubs. They own those rights through our operating agreement. We had them vote to put them into a new offering, if you will. And then we had the expiration of our international deal that was represented by IMG, one of your old hunting grounds. We had our data deal that was coming to an end, our sports betting deals, and we basically had all of those agreements end coterminously. And then we went to the market with a package that was basically focused on every game, all of our minor league games, all of our youth games, globally distributed to an audience of any consumer watching at any time. And it led to going to the incumbents and talking about what their future streaming plans were. And then it very quickly turned to the most likely candidates that you would expect, and Apple ultimately being the one that, you know, made a $2.5 billion offer for our rights. It allowed us to have a schedule that was consistent. We have 61 different start times and days in Major League Soccer this year in 2022. That's the opposite of what the National Football League has, which is a good media property. We had so many different broadcasters and quality of production that ranged from 15 cameras to 3 cameras. We had challenges with how we were managing that commercially, and it all was aligned into one perfect package for Apple. I met Eddie Q at a conference, and they were, as people like me do, talking to them about what their future plans were. And Eddie said, we're looking for a place where we can go to a consumer and offer them a game on a device, in this case, 800 million devices, anywhere on any device at any time around the world. And it led to the deal that we were able to consummate. We will have linear deals that we'll announce over the next couple of months that'll complement an all-streaming package, but we couldn't be more excited about it. And it's got its fun risks associated with it, but what's life without a little risk?
Do you think you have a little bit of an advantage on other sports properties because you're able to take your product to where the consumers are and where the next generation is, where the other sports are tied to the money's in the old media and the consumers in the new media. And does this kind of give you an unrestrained opportunity to take advantage of that position?
You know, George, I think old and new are becoming one, right? It's becoming the next generation of what a consumer wants. And I think the difference here today is in the past, and I do think this is going to change, leagues or properties, and you knew this very, very well from running NASCAR, basically scheduled their events around what broadcast windows existed. So it wasn't consumer facing, it was based on everything else that was going on. In the streaming world, in the Apple world, we'll be able to schedule all the games in ways where our fans are telling us they want to see games on Wednesday nights and Saturday nights. They want to see playoffs at a particular time of the day. We had 2:12 noon games this past weekend. We'll be on tomorrow night in Los Angeles and in Philadelphia at a time that it was perfect for what a broadcaster wanted, but may not be right for the fan. So I do think that going forward, we're going to see more consumer input on what it is that they want to consume, how they want to consume it, what kind of interactivity they want with the broadcast, where does engagement like sports betting and data fit in, how do you have some of it but not too much of it, how do you speak to the consumer in a way where you have a direct relationship, because obviously when they're buying a subscription or they're engaging with our content, we're going to know who they are, we'll protect their privacy, but they could opt into a wide variety of options and opportunities. And I think the rest of the sports world is going to get to that point, because ultimately that's where the fans are. That being said, I wish we were in a position when many of the other leagues were able to do what they're doing with the size of the deals they're doing it and the leverage they have. We have to recognize who we are and what we are, what's the best way to capture the opportunity with the property that we have and the fan base that we have.
And a little bit, tell the group how the deal happened, and talk about the commitment you sense here from Apple and how unique that might be.
We're looking at our notes because we're actually interviewing each other here. This is good. So he's not going to ask me anything that I'm going to get pissed off about and vice versa.
We hope.
You know, ultimately, George, I think Eddie Q did a panel with me at Paley last week, and he did one with Sports Business Journal. And then I brought him to my office to speak to our staff at town hall meeting. And it's really a fascinating guy who basically runs everything that you do with your Apple phone and engaging in all the content that's on it, from news to maps to music to every aspect of what Apple does to have the most consumer-oriented company in the world. And what is great for us is, you know, yesterday we were on a meeting with their integration group, and you have people that are running every touch point for that company and figuring out ways that will engage with us. We're their only fully global sports streaming property now. Obviously a great relationship with baseball on Friday nights, but this will be every MLS game, both in front of the paywall on Apple TV Plus and on our subscription service. And it allows them to take everything that they want to be with their vision for the future of Apple TV and thinking about how you do it with a league that's willing to take some risks and willing to push this very young fan base over to ultimately where we and they think is the best way to consume sports content moving forward. We recognize that we're playing in a global sport, but we're not yet a global league. So now if you are in Kansas City, and you'll hear from the Longs with their women's team in Kansas City, if you're a fan of Sporting Kansas City, that game is going to be available to anybody in Kansas City, anybody in the United States, throughout the North America and Canada, and anybody around the world, whether on an Apple phone or an iPad or any one of their devices where the Apple TV app is embedded. So that's almost 1 billion devices. So it allows us to accelerate our global presence in ways that we couldn't do because we're 100 years behind the Premier League. We're not paying salaries that they play in Manchester City or in Germany or in Italy. When we sign a player from Colombia or we sign a player from Argentina, the ability to get that audience, that team, that fan base to connect with our club in a game that will be accessible to them by opening up their phone or their streaming device is the primary value to us. And I think you're going to see that be very, very valuable for other sports leagues in time.
One last question on Apple. So What keeps you up at night about Apple? What are you worried about? You know, what concerns do you have with a new partner in a new category?
You know, listen, it's all new. They're new to this. The baseball deal is basically in front of the paywall, and that you go to your Apple device or any streaming device, and you watch a baseball game. And by the way, I think those games are great. If you watch those games, the quality of those games are really spectacular. But taking in every 600 MLS games, hundreds and hundreds of MLS Next Pro games, that's our second division, our AAA baseball, our youth matches. Every club will have a room that will sit on this MLS streaming service. Every one of our soon-to-be 30 teams will be pushing content. Our clubs are going to have to be content creators in addition to putting great players on the field and fans in their stadiums. So we're thinking of ourselves as a content company to create a direct relationship with our fans. And by the way, that's not something that we've done before. We will produce every single game. And that in and of itself, for those of you who know the challenges of media production, and you know that so well, George, with the companies you've invested in, that's a big lift. Now, Gary Stevenson, who launched the Pac-12 and the Golf Channel and worked at the NBA, is overseeing that. Seth Bacon, who worked for many years at Fox and at NASCAR. We've got a great group. We're hiring hundreds of people, and we're going to be off to the races.
Good stuff.
All right. Now it's on to me. So, George, for those of you who know George and know Bruin, George has created a company that I think is best in class in thinking about media, the sports ecosystem, all the great things that are going on as a sports league, because many of the companies you're investing in have relationships with Major League Soccer and other leagues. But when you left your last great role and got into phase 2 of your career, really phase 3 of your career, you had so many different things you could do, George. Why Bruin? What was the unique selling proposition of it? What is it meaning to all the investors that you have that have gotten great returns from all your terrific investments? Tell us a little bit more about who, what, when, and how.
Well, that's a tough question to answer. No, I'm going to have to live up to that question. But look, I think for Bruin, for me, was an opportunity to be entrepreneurial, do something that reflected my values, and the opportunity to really build something from nothing. And I think on all those measures, we've been able to do that, and it's been a lot of fun.
You got to go into more detail. Now I'm one of these guys here saying that was like a typical answer your PR guy gave you. And so, George, let's look at Delta Tray. You know, a company that we all knew in the international sports world, a company that helped leagues manage their websites, but a sleeper.
100% sleeper. So what we've fallen into in a good way is taking great non-U.S. companies to America. In the case of Delta Tray, when we bought the company, it had no U.S. business. When we sold the company, half the business was in the U.S. And of course, what we do is we invest around the change in the media landscape, meaning content's going to be distributed on different screens in different ways, and all our investments are around that. Whether it's a data company with 2 circles, whether it's virtual technology with TGI, whether it's Full Swing, a golf tech company that really embraces interactive technology. So we believe in technology. We believe in the change in media consumption. And we actually have built a global network. Bruin today has people on the ground in our portfolio companies in 20 countries. We have 55 offices around the world, 2,800 employees, and operate and do business in 50 countries. We work with almost every single major league and federation in the world. And what's kind of fun to see, initially with Delta Tray, we took Delta Tray to America. Now we're taking Full Swing to the world. We bought a company, TGI, in Australia, and we're taking it to America and Europe. So we've built this global network where we're able now to cross-pollinize these companies. My favorite story or example is we bought this company in Australia that's now doing business in Italy, and never did business in Europe before. So we've got a global network, and we really invest in technology in and around the change in media consumption, and it's really worked out quite well for us. I mean, one of the things the Apple deal is going to do, I think, for you and others is, the future of sports is the lifetime value of the consumer. And today, as you point out, it's really not even on people's minds. If you really think about the consumption of content, it was really B to B to C. The TV networks didn't even know really who was watching the shows, but in the future, just like with Apple, they're going to know what person is watching, what they like, what they don't like. One of our virtual ad companies has technology that you can customize ads consumer by consumer. And so I just think that's the future, and that's a whole new way of looking at things, and not really the way sports has looked at things, even though that's the way a lot of consumer packaged goods have looked at things. So that's the future, and so we're trying to invest behind things in that category. You know, I went to Brown. I have a 91-year-old professor that gave me a lot of good grades, so every year I go back and teach. And I was telling the kids there, I said, you know, you want to invest in growth segments. Would you rather fly into a headwind or have a tailwind? And the growth is in the change of media consumption and the change in how content's consumed and the relationship between a sports property and the consumer. That's where the opportunity is, and that's where we're investing in a global basis. And we're able to learn, you know, what are the best practices in Europe? What are the best practices in America? What's the best practice in Asia Pacific? And kind of trade that around the world. So it's been a lot of fun, and the best is yet to come.
That was a better answer.
Thank you.
So, George, a lot of PE folks in here, and I think it's a good way to segue into how you've gone out and raised money, and what it was that the pitch that you have to the various folks that are looking to get a return in investing through your philosophy that you have. MLS, for those of you who don't know, took an investment almost 10 years ago from Providence Equity. We have a company, it's probably not dissimilar to BAM, the Baseball Advanced Media. It's called Soccer United Marketing. Providence made an investment in that. It's sort of a separate company. Half of its revenues is through MLS and half of it's in non-Major League Soccer. It's commercializing the sport of soccer globally. That worked out very well for Providence because we took them out way before the time period that they expected. But when the world of PE is making an investment in sports, and we'll talk a little bit about what they're doing with the leagues, there's a time frame associated with that. When you're going and speaking to investors, what is it that you're telling them as it relates to what they should expect in the investments that you're making in this new ecosystem?
Yeah, well, it's kind of funny. They're also telling me what they expect too. But so we like to build and grow things. And so when we go to a CEO or a management team, it's like, hey guys, you know, we see this potential for your company, but you know, maybe you've never deployed capital, maybe you've never taken risks, and maybe you've never been part of a global network. And so that's what we really add to the companies. I think what's different about Bruin is, you know, I'm not a classically trained investor. I'm an operator. Now, we've invested in 30 companies, and we've traded out like 1 or 2 CEOs, which for private equity is unusual. So we're not restructuring companies. We're putting them together to build them. But at the same token, every company we invest in, we feel like we could run it if we had to. And so we also know what it's like having been a CEO. You know, I've been fired by a client. I've missed the budget. I've had really bad things happen to me. And I think we do our best work when things go bad. Honestly, I don't know what you do in private equity if you weren't an expert and all those things happen to you, because they've happened. And we're there. We can help when things go bad. And we're also very good at helping when things go well, because we're able to go on the offense. And I think that's kind of what the Bruin difference is. You know, when you look at private equity, when I look back, right, you know, Ted Forsman buying IMG, he was in an early stage. The MLS deal with Providence was early. TPG and CA was early. Silver Lake buying Forsman Little. But today, there's a lot more people in the space doing a lot of different things. What we've really focused on is operating companies, which is probably different than most. And we're kind of guys with a pick and a shovel. And I think when you look at On Location, what we did there, we hired personnel that, you know, probably the NFL wouldn't have hired. We invested in a way in the business that probably the NFL wouldn't have. Now, to their credit, they recognized in their model that's not what they would have done. So we'll invest capital, we'll make acquisitions, we'll do things that, A, generate, you know, solve a strategic problem. In the case of On Location, it was the secondary ticket market at the Super Bowl. We'll solve a problem for them, clean things up, and then at the same time, make a good investment. So I think, that's kind of our angle, but gosh, there's a lot more angles today than when I started.
So last one, George, and again, many people in the room are probably in this space. So back in the day, and MLS is probably a good example of that, this league is what it is because of the strength, commitment, passion, and collective energy of our ownership. And in sports, owners are the people that you know and you see on the sideline, and they're in the press all the time, both for good reasons and at times challenging reasons. But it is that desire to do something that is about the fan, about the community, about driving value, and about really believing in the sport. And as we've evolved over time, our industry has begun to very recently take investment from private equity funds. Every league has got rules that are somewhat similar. MLS has got our Miami team has an investment from Ares. The guys at Arctos have got a bunch of our teams. There's, as you know, no shortage of groups coming together and looking at sports team investments. Obviously, over time, sports teams have always traded above what people have put in, at least to this point. So talk to me a little bit about that, George. Do you see Bruin getting into that business? Do you see Bruin investing in pro sports at the ownership level?
Yeah, so in the current construct, we're kind of focused on operating companies, but as we look forward to what I call Bruin 3, we'll be evaluating different capital structures and different approaches. And obviously for me, when I look back at the IMG experience where we changed out, we were in the college business, and we had 400 salespeople. We traded out 300 salespeople of the 400 in 18 months and probably recruited 25 or 30 team executives for the University of Georgia and other places like that. We do bring a unique skill set in terms of understanding the commercial aspect of a team and some knowledge on the product side. So it's a logical extension for us. We just have to figure out the right capital structure and the right approach. And obviously, you have some innovators out there with Arctos and Dial and others, and Jonathan Nelson and Don Cornwell that are going to get in. So those guys have innovated, and we're looking at all that, and those are things we'll evaluate going forward. As you point out, for the last 30 years, team values have increased by double-digit CAGR over 30 years through all kinds of economic conditions. And while there's no guarantee that will continue, it certainly is a pretty strong data point. And I think when you look at the scarcity of the asset, and I think the untapped market of the lifetime value of a consumer in a fragmented world, I think sports for a long, long time is going to hold a lot of value. All right, so I got Don. Don's back up. So Don, team valuations on MLS on average are $582 million. 15 years ago, they were $35 million. What's going on?
Well, got a good commissioner. I think, George, I think it's a good segue from investment overall in our industry. I'm going to continue to pound forward on this idea that with the right governance, the right structure, the right ownership, the right plan, our business remains untapped. The opportunity, particularly in the soccer business, this country has become the virtual ATM for the rest of the football world. Every league and every federation is opening up offices here. Obviously, the World Cup in 2026 will be here in a couple of years. We still have not captured the global opportunity, and that really is where the true upside is. But when you think about where we were, when I came in, the first deal that I did was Dave Checkett's in Salt Lake and second team in LA, and that was $5 million, and that was 2005. So teams obviously are trading way higher than that. The LA team, we've got a big game, El Trafico tomorrow, our two LA teams. LAFC just raised money at near $900 million. And part of that is the revenues are growing, albeit we're at a higher multiple trading than the other leagues because of still the immaturity of our market. The fact that the demographics of our country are shifting in our direction in ways that are almost hard to imagine that will stop in terms of the diversity of our country, the age of our fan base, the fact that football or soccer has become so global, you could consume and be a fan of any team around the world, but we're the only men's league that actually can play at the highest level here in the United States. And then, so those are the broad 30,000 foot view of it. And not everybody believes in it, but certainly enough people do. But when you really think about what it is that's being counted in that value, these teams are not just a sports team and it's intellectual property. Major League Soccer, you could sell players. Soccer and football, you own your player's contract. We just sold a 17-year-old goalkeeper that was a homegrown player in Chicago to Chelsea for $10 or $12 million. He played in our academy for 1 year, and he's going to be one of the great young American goalkeepers in the future. And it was a $10 million sale. So start thinking about, as America becomes, on the men's side, it's already there on the women's side, a producer of some of the great soccer players in the world, and that will happen with all of our academies and the energy of our federation. The value of a whole new revenue line is going to be significant. Our team in Dallas has had $40 million in player sales just from players that they've developed in their academies. And then each of these facilities, and Kansas City is going to be opening up, the Current will be opening up there shortly. You've got a development center, you've got a stadium, you've got real estate development around it. Our new Miami project, which is shovels in the ground, is $1 billion real estate development. And all of that sort of goes into what the value of the team is. And ultimately, America and the North American sports marketing model still is leading the rest of the sports industry. We've got a venture fund that's made investments in Fanatics and in SeatGeek and SoRare, and those investments, because we're leveraging our intellectual property, are valuable to our owners, and we're able to not just invest capital at good valuations, but use the relationship. So on and on and on and on. If you're focused and you really believe in the future of what the value of that consumer is going to be, MLS team values will continue to grow.
So I talk a little bit about what you're doing with Liga MX. You know, I took NASCAR in 2004 to Mexico City. I was ahead of my time, but you know, I think when you think about Latinos in the U.S., you're 75% of them are Mexican, and then you have different elements within that remaining 25%. So really, there's an enormous Mexican-American population. You have this, tell everybody what you have going on with Liga MX, and then also explain the impact of the World Cup coming in, you know, in 2026.
Sure.
Let's give a little preview on that.
I mean, I think this speaks to a league that's only 26 years old, so we're still the youngest of all the developed men's major leagues here. And you think about the fact that even today we're sitting and concerned with and focused on what do we need to do to continue to move this league forward with innovation and taking risks, understanding that the opportunity is great and endless in front of us. So the Mexican League is actually very popular in the United States. Their ratings on Univision are significant. They rate a Chivas Guadalajara Club America game will rate higher than an MLS game, and obviously Univision is in far fewer markets, households than any of the other linear networks here in the United States. When they play exhibition games here, it does quite well. An example of that is at SoFi, we had two Mexican clubs play our two LA teams, and you know, we had a $6 million gate in a doubleheader. And that's a soccer game on a Wednesday night in the summer, and most of you weren't fans, probably didn't even know about that game, and over 1 million viewers on Univision. So we've been thinking about how do we get that league more closely connected with our league, and rather than just play championships, we have something called Campeones Cup. They're champion against ours. NYCFC played against Atlas in Yankee Stadium, and multi-million-dollar gate for that midweek game, and that was just a friendly. So over the last couple of years, we worked on creating a property that we jointly own. So we went to FIFA, who has been busy talking about how does MLS become more popular, and we said, here's a good way for you to give us approval to do something that's never been done in the football playing world. We'll close MLS down from mid-July to mid-August every year for the next 10 years. All of their teams will come up to the United States. All of our teams will play March Madness meets the World Cup. Every one of their 88 games will be played in a very concentrated period of time. Group play, just like the World Cup, all the way up to a final. Obviously, Apple will have a big role in that. Some of our linear partners will have a big role in that. Our sponsors that are selling soon to go public with are paying, you know, big fees to be sponsors of it. We'll have tens of millions of dollars in prize money as a way to sort of connect with Mexico in the years leading up to the World Cup, which will be here in Mexico, Canada, and the United States. So my view is I think it'll be a big property, and we're very, very excited about it. But it's all part of a grand plan, George. FIFA really wants to untap this market, and if they can turn the 350 million plus consumers here and the many consumers in Mexico and Canada into productive fans of the global game, I think the sport will be more popular and more valuable. So all of us, whether it's the NWSL or our league or the youth market, we have an opportunity to have a North Star. We'll have a championship 4 years from now. We know exactly when it's going to be played. There are no other company could say in the summer of 4 years from now, we know exactly what's going to happen. The biggest sporting event in the world will take place right then, and it gives our entire ecosystem the opportunity to create plans around it. It'll be big and fun and exciting.
And I just think, again, if you're a company in America that has to grow, you need really a Mexican platform with 70 million Mexican Americans. How do you grow your business in America without reaching them? And I don't know that there'll be a better platform than that platform every summer. Now,
Okay, George, now I'm going to have fun.
all right.
So most of you don't know that George comes from a professional football playing family. George was an accomplished player, albeit made the decision to go to a good Ivy League school as opposed to like your uncle playing for the NFL. But George's son, who I've spent some time with, is now the starting quarterback at Notre Dame. So, George, we talked about this when Andrew was thinking about becoming a college football player. This is outside of our speaking points. I told George I surprised him with this. What's it like being the parent of a kid who's the quarterback for Notre Dame, number one, because that's interesting to me. And number two, talk about the NIL world. And in your experience, you basically founded the college market at IMG. What do you think this all means to us in the industry and to investors, because we're right in the first inning?
Yeah, so one, I'm proud of my son. I would say even being in the business for 30 years, the platform of Notre Dame for me is overwhelming. It's the only team, pro or college, that's on national TV each week, and there are 10 or 15 websites that cover Notre Dame football. I don't agree with everything that's written. Neither does Drew's mom, and so it's been. I describe it as being on a roller coaster. I'd rather be on the roller coaster than off the roller coaster, but you're really on a roller coaster. And everybody here who has children that are playing, it's the same thing. It's just a little bit higher. Really proud of him. I mean, to see your kid get up and have to field, I don't know how many. He's probably done 15 or 20 press conferences, and he's 3-1 as a starter. He lost his first game the other night, and that's another whole situation. How do you handle that? What do you say? And so it's been quite an adventure. I'm really proud of him. I'm proud of what he does in the field, but I'm really proud of the kid he is, or the young man he is. I told him the other day, I go, this is a lot for a 50-year-old guy. Forget about a 20-year-old guy. But it's a blessing, and we're very grateful for that. The NIL, I have to look at the timer over there, but the NIL is kind of a result of, years ago you knew the NIL was coming. The industry could not coalesce and lead its way through the proper administration. So the NIL has really become a legal way to pay players. It's not really an endorsement thing. Now, there are endorsements I went through this yesterday with a guy, so you can do endorsements for Drew in Connecticut and Chicago and South Bend, and that's nice and everything. But really, where it's disrupted the game is it's a legal way to pay players. But the bigger issue, I think, for college sports is that, look, the Supreme Court ruled 9-0 that the way the college athletics is organized is illegal. And they lifted the cap on academic expenses. But a 9-0 ruling by the court that said essentially college sports is in violation of the Sherman antitrust laws tells me what it means, that in 5 to 10 years, that players are going to be paid from the ticketing and media revenue unless the government steps in, Congress grants an exemption, or if the industry can find the leadership to get to a better place. And what's disappointing as someone who loves college sports is that you knew the NIL was coming 6 or 7 years ago. Essentially, the industry could not agree, and therefore the courts ruled. And so my hope is the industry leads its way out to a better landing. My fear is that the courts will rule, and I don't have faith in Congress stepping in and agreeing on anything either. So I think it's a very tricky time, for college sports. I'll end on this. I mean, I went to Brown. The Ivy League had a 40-year exemption from the antitrust laws. And a couple of weeks ago, the Congress rejected the application. The Ivy League doesn't pay kids for athletic scholarship, but that's an agreement amongst competitors not to compensate the players, which Congress has rescinded. And I think that's an indicator of where this whole thing's going. So great experience as a parent, a dad, and a family, but I think some big challenges for the industry moving forward. So with that, are we out of time, or we take any questions? We're out of time. We'll take, anybody have any questions? We're happy to take some questions.
Don, so when you think about the prevalence of all the European football leagues and the MLS is in its maturation, you talked about the sale of the goalkeeper, and then there's the Brendan Aaronsons of the world from Philadelphia to Leipzig and then over to Leeds. And where do you see the future of MLS as far as talent production versus the aspirational league, not the retirement league? Where do you see that evolving over the next 20 years?
It starts with, we can't just make those decisions in a vacuum and have a bunch of people at the league or our owners through a committee decide that. We've got to get data and speak to our fans about what is it that motivates them. So the soccer fan totally accepts the fact that you're going to develop a player, and if that player has an opportunity to go, Brendan Aronson, be one of the stars of our national team, the soccer fan accepts that. That being said, our Philly team has been selling out every game for the last couple of years. They're doing very well. They've got an economic engine of producing guys like the Aronson brothers, and it hasn't affected ultimately their popularity. But it does put pressure on us. And how do you now have a strategy to keep those players as long as you can to create a connection with your fan base, and at the same time have the economics when you do sell that player to bring in a world-class player who might have more popularity. By the way, those players are more risky because not all of them work. The market for those players is very different. That dynamic is something that, if I talk about the most uniqueness, the unique aspect of Major League Soccer versus the other domestic major leagues, it is something that we're very focused on trying to be sure we're making the right decisions. So our system allows us to add another designated player, if you will. If we're finding that some of the young American players are not staying in the league long enough, we just have to bring in more international players. And then we run in conflict with our federation that wants to have more American players being developed on the field. So I will say that MLS is the most challenging league to manage as it relates to the other sports here in our country, but the opportunity on finding the next Brendan Aronson is endless. His younger brother, 17-year-old kid, came out of nowhere, right? And he's a star for the club, and I think the future is going to be more and more young kids coming out of academies, both on the men's side and the women's side. That's an ecosystem that is relatively untapped for us. Maybe it's $100 million in revenue. It could be $1 billion in revenue.
All right, we got time for one last question.
You contrast MLS with USL, and what do you see as the future of the USL?
It's a good question, and I've been on the board of U.S. Soccer for over 20 years. I've seen the growth of our sport at all levels through many years of the pain and suffering of being in the soccer business. When I left the National Football League, I had an exit interview with Paul Tagliabue. He said two things to me. He said, one, you're going to learn what life is like without leverage. And second, you're going to learn that your job as commissioner is to keep the owners who hate you away from the ones who are undecided. And I think about that every single day. But I don't know how that came into the USL question, but I have great faith in the future of professional soccer here in this country. Look at what's happening in the NWSL. And by the way, all leagues go through their challenges, right? And even with the challenges we all go through, values continue to grow, the opportunity continues to grow, and leagues are figuring out a way to create opportunity in markets throughout the United States. It's going to be a long answer. We never thought that we would be able to have a team in Austin, Texas, that has 20,000 fans, average ticket price of $70, and 20,000 people on a waiting list. We have a new team in St. Louis coming in next year, owned by the family that owns Enterprise Rent-A-Car. It's an all-female ownership group. They're also a 20,000-seat stadium and open up next year. They have 60,000 season ticket deposits. 60,000. That's a good problem to have, but 40,000 people aren't going to be able to go to the game. We'll sell them a lot of Apple subscriptions. But, you know, at the end of the day, the opportunity to grow this game, which speaks to the growth of the limited amount of MLS teams, there'll only be 30, maybe there'll be a few more, pushes that opportunity down to other leagues. And whether that's a separate offering on the women's side or it's the USL and all the offerings they have there, I am shocked at the growth of professional soccer in the United States, and we still don't have the audiences that the rest of the European leagues have here. That's an opportunity for us, and the audiences that the rest of the pro leagues have here. So endless. I'm excited about it. I'd be bullish about it if I was an investor, not just because I'm running one of those leagues, but those values continue to grow. USL has seen great growth in their valuations over time.
Thanks, guys. Thank you.
Thank you.